Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. So, daily chart, you can see they closed below the 9-day yesterday. They're trying to maintain the 9-day as resistance today, although we got a decent little pop up from jobless claims, etc., heading up towards the 9-day, which is right now, call it 71. So it's about it's a couple minutes before 9 o'clock Eastern time as I'm doing this, and we're trading 69.75-ish. On the hourly chart, you can see they did a good job of pressing below. They're making a serious attempt at trying to get the 9-day back. So if you're the bears here, you want a nice technical test and a technical failure. And if you can get that and somehow over the course of the day produce a lower low heading into the jobs report, that becomes interesting. The other thing, if you're the bears, you're not necessarily dead. If you go over the top and go back to weekly pivot, say, and walk it up into the jobs report, and jobs report knocks it in, then you still have a chance, if you can close below the 9-day again, to call the week a win. But in the larger scheme of things, you can see you've got this 45.50 area. We traded as low as 48.75. The low from Thursday of last week, 44.75. Every time we get down into this area, let's zoom it out one. We're just in this prolonged box. So if all we're doing is trading down to the bottom of that box and we come up and get some momentum going, well then sure. I mean, weekly pivot, that's a real possibility. So as far as breaking out or breaking down from the bigger range, we have not done that. So there's plenty to fight over up here. I expect whip and chop into the open. And we're just gonna have to wait and see how we close. We got jobs tomorrow morning, 8:30, and then next week we get into the Fed, which will be Wednesday at 2. Once those two things get out of the way, then you really start to wonder: is it going to be an active holiday season, or is it going to be a fairly inactive holiday season as we head into January? You never really know till you get there. But the keys to watch today: you got the 9-day at 71, daily pivot 69, VWAP, proprietary moving average, hourly mid-band are all jammed in between 57 and 58. So on any kind of a pullback off the open, this area will be important, okay? And if it really wants to chop and fight, then the zone today will be 57 to 71, and we'll be there most of the day, and we'll let jobs tomorrow morning decide what ultimately it wants to be heading into next week. The Bears had a good day yesterday. The Bulls are fighting back. They're holding the bottom of the range. They're heading back to the 9-day. And how price reacts here is going to have a lot to do with how the day gets traded. As far as executing on trades, profits, and things like that, I will say the same thing that I said the other day. Take your profits where you find them. It's a tape with limited opportunities. It's a tape that you just don't know what's going to happen to your runner. I took a 10-handle runner on 75s that I was holding from yesterday. I decided not to take a 20. Why? Because, in the big scheme of things, if they were going to break the bottom of that range, it would really come in. And I was more interested in seeing if that was going to happen than taking an extra 3 1/3 handles of profit. But that's in the context of having the metrics made for the day and the week already on Wednesday, which is what we have going on in the room. Don't fail to meet your metrics for the day or the week by assuming that things are going to run to the downside or run to the upside. That's not the case. It's not that kind of tape. It's a range-bound tape. It's a tight tape. Treat it as such. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.